Hello guys, welcome back to Study FX channel. On this channel, it's about forex trading, better trading, and also crypto trading. If you're new here, welcome, and if you're a returning subscriber, thank you for always coming back to watch my videos. So guys, on today's video, I'm going to give you some few tips on how you can avoid margin call. Avoiding a margin call in forex trading is crucial for maintaining your trading position and protecting your capital. Here are several strategies to help maintain margin calls. So one thing is maintaining sufficient account equity. Regularly check your account equity to ensure it remains above the required maintenance margin level. If your equity is close to the margin call threshold, consider adding more capital to your trading account. Another thing you have to do here is using stop loss. Placing stop loss orders helps limit potential loss on each trade, preventing your account equity from declining too rapidly. So you can just use a stop loss order, and also you can adjust the stop loss as the market moves in your favor. Consider adjusting your stop loss order to lock in profit. I think this is where trail stop loss comes in. Like if it's in profit, you have to move your stop loss from the negative sides and come back to the positive side. Another thing that you have to do here is choosing appropriate leverage. Using lower leverage reduces the risk of significant losses that can lead to a margin call. Be aware of different leverage levels can impact your margin requirement and overall risk exposure. So another thing you have to do here is to diverse your trades. Don't put all your capital into one trade or currency pairs. You can choose to take two trades only on Euro USD example, and just wait maybe until you get a profit, but don't put all your capital into a trade. Understand the correlation between currency pairs to avoid taking on excessive risk for correlated position. So another thing you have to do here is to keep an eye on market news. This is a very key point. Keep track of economic news, events, and market volatility that can impact your trades in the market. Be prepared to adjust your trading strategy during high volatile or major news events that could affect your position. The next thing that you have to do here is regularly review your trading plan. Ensure your trading goals and risk management strategy are realistic and align with your risk tolerance. Periodically review your open position and overall market condition to determine if adjustments are necessary. The next thing that you have to do here is use a demo account before trading live. And this one I usually tell my traders, and I usually tell who I have taught, because there are those people that I taught physically. I usually tell them, make sure you trade using a demo account, even if it's about 1 to 3 months. Practice that strategy before you enter live, because trading on demo account, you gain experience and then you develop a strategy without risking your real money. Using the demo account to experiment with different stop loss levels, lot size, and leverage ratio, it's going to help you to at least understand some of these things. The next thing that you need to do here is understanding margin requirements. Familiarize yourself with your broker's margin requirements, including initial and maintenance margin, to avoid unexpected margin calls. And I told you here, different brokers have different requirements in their apps or website. So keep an eye on your margin level, which is the ratio of your equity to your used margin. So another thing that you have to do here is automate risk management. Like many trading platforms offer tools to automate risk management, such as setting automatic stop loss or take profit orders. The next thing that you can do is use price alerts to notify you when your position approach critical levels, allowing you to take action before a margin call occurs. By implementing these strategies, you can minimize the risk of receiving a margin call and protecting your trading capital. Consistent monitoring and disciplined risk management are key to long-term success in forex trading. So I think that's it for today, guys. Hope to see you in my next video, and I hope you're learning in this Forex journey.